Hey, Rob Heider here. I'm going to start doing a lot more of these long form videos and get a little bit better content out there. I'm going to start with just a little bit about who I am. If you've got questions along the way, drop them in the comments. Happy to kind of circle back on those. But start with just who I am, and then we're going to go into some deal analysis and bigger, scaling up into bigger projects and whatnot. So, like I said, Rob Heider, St. Louis, Missouri here. And my upbringing and kind of how I got into this is probably quite a bit different than most folks. I grew up kind of lower middle class. Family didn't really own a home, just kind of rented apartments and whatnot growing up until I was 12 or 13 years old, I think. First member of my family to go to college. I don't necessarily think college is necessary for everybody, but for me, it was a pretty good jump off point because it was the first point in time that I really could see people that had money, or I got introduced to folks that had kind of bigger ambitions, or their family had done things. Because like in my little minute world, there weren't a whole lot of folks that had any money or owned real estate or even was in the trajectory. So it's pretty interesting. I think the jump off point for me really was I grew up with a little bit of an entrepreneurial background. My dad started a small concrete company when I was in high school, and I kind of got to see a little bit more of the entrepreneurial bug from that standpoint. And then went to college. I got a degree in finance and real estate, which was huge. I got around a lot of folks that were investing in real estate, or families that invested in real estate. I had a really, really good professor at University of Missouri that owned a fair amount of real estate and taught these courses that kind of really helped bridge this gap to understanding how it could be done and how to analyze deals to get that jump start. One of my good buddies in college, his family owned a development company that was in Columbia, Missouri, which is where the university was, and could kind of see the difference and kind of go into different properties and kind of seeing it. And actually, for one of the courses, real estate courses that I took, it was an appraisal course for commercial appraisals, and we actually analyzed one of the projects that his father developed, which was really interesting, kind of to see folks that were successful in real estate and then also do the analysis and then on a project that they had owned at one point. From that point, I didn't know what level of commercial real estate that I wanted to get into, if I wanted to go to development or go work for an investment group, or kind of what it would even look like. I ended up getting a job working for a bank that had a big commercial real estate lending arm out of Chicago. Very, very lucky to kind of get included in this program, and it was taught by Northwestern University's head of their financial accounting program for their MBA courses. So this was really, really important. So it was about a year of just cramming in like a war room setting, just cramming real estate analysis from a commercial real estate level. So by the time I left there, I probably underwrote over $1 billion in real estate deals at 23 years old maybe, and then jumped into the lending realm from that standpoint, where now it's like, okay, go and apply that knowledge. And that was a really, really good jump off point too, because I was able to work with a lot of real estate investors, a lot of real estate developers, primarily on the commercial side. Every now and again, we'd work with some folks on the residential side, home builders and whatnot. And I did that for about 4 years. Big bank out of Chicago, but I came back to St. Louis, and we had a big office in St. Louis for that bank, and was just actively involved in a ton of different development deals. And we would work with the developers where we would finance the land purchase and the construction piece, and then we'd have to make sure that the deal was underwritten and would work on a cash flow basis, so that once the construction was complete and the tenant was in place, that it could then be taken to the secondary market and refinanced based on the cash flow. So worked with that a ton. By the time I was 25, I'd managed about a $250 million portfolio that was mine. And that was right around 2007, 2008, right? So it was a really interesting time for the folks that are old enough to really remember the Great Recession and kind of what was going on in that window. So at that point, my bank actually got purchased by Bank of America. It was kind of part of this whole recessionary roll-up and kind of what had happened. It adjusted things. I didn't really want to work for Bank of America. They weren't very entrepreneurial. They didn't look at things quite the same way. So in our office, in our commercial real estate office, we had about $1.2 billion portfolio, and there were about 3 kind of high-level folks. Each of them went to go run the real estate programs for other large banks in our market. So I followed one of those guys to kind of more of a community-based bank that was strong in the real estate sector. And this was huge for me, both on the commercial real estate side, but really on understanding the note purchasing side. This is where I really refined the note purchasing skills, because it was 2008, 2009. One of the senior guys at LaSalle Bank, the bigger bank I worked for, went and was heading up this real estate group. And then with a short window in time, he became the CEO of that bank. So I continued to report to him. And it was really, really weird, scary time where the FDIC was cracking down on all these banks. Lots of banks were going out of business. Lots of real estate developers and investors were going out of business, and foreclosures were super high. And it was just a really, really scary time at that point. So I spent a lot of my time with him trying to figure out what kind of new loans that we could put on the books to make it work, like actually get interest income from a bank standpoint. But about half of my time was spent on helping analyze bad deals that were going bad, how we were going to work those deals out, how banks think when they need to work deals out and get them either back on track, get additional collateral, or move them towards a note sale or a foreclosure, and then really kind of how the board of directors looked at how to dispose of those assets or those loans when the deals started going bad. When the bank's balance sheet or their risk ratings were starting to kind of get in the wrong territory where the FDIC was really going to crack down on them, kind of how their thought process changed. So that's a lot of the knowledge that I use on a day-to-day basis when working with banks. I'm trying to buy notes or analyze which banks might be interested in selling notes, or maybe just foreclose on an asset and we try and buy the asset that way. So worked on that for about 5 years, pretty close, both at the board level, working directly with the CEO, and then also kind of working on trying to bring in new high quality real estate loans, kind of working that process through. And it was really, really unique. So we would do these, what most banks call them asset quality meetings. Some banks might call them distressed asset meetings, where they would just have a list of loans based on an internal credit rating. And when that credit rating got below a certain point, then additional capital would have to be assessed to those loans backed by real estate, and it would change the amount of capital that the bank would have to put against that loan, which would invert the overall return on the investment. So spent a ton of time doing that, and I could go deep in the weeds here, but spent a ton of time doing that and really got to know how banks think and when they decide to make certain decisions to dispose of assets. So used that quite a bit. Worked for that bank for about 5 years. During that time, I built my own rental portfolio. I think I owned about 25 or so doors when I left banking. I was doing about 1 to 2 rehabs a year on the side while I was in banking. I left banking in 2013 or so after being in banking about 10 years and went off on my own. From that point, started Core Properties, which is my main operating business that we buy and rehab and wholesale single family and small multifamily houses. But even deeper than that, I started working with banks that I knew in market and analyzing their distressed debt, buying their foreclosures, but then specifically buying the distressed notes. And that was really the catalyst that kind of jumped off that side of the business for me. And just with the banking relationships that I had, I didn't have to know all of the backstory and really analyze the bank's balance sheets quite as much as I do now as we're trying to expand markets and look at other places. It was really a big catalyst, a big jump off to be able to do that. And we started doing this with failed condo buildings where we would buy a pool of distressed residential condo units and then foreclose those out and get to the assets and then either own them as rentals or work with the sellers and do seller take back financing or whatever it might be, and then starting to get into the commercial side, buying commercial distressed loans, some of which we would just work out and work with the borrower, get to like an interest only position and maybe do some deferred payments and tack them onto the principal on the backside. If we bought the loan at a big enough discount, then we could give some of that discount to the borrower to try and work those deals through and get them refied, and we would make the spread between the discount. And many times we would have to get to a foreclosure scenario, take over the asset, then we would own the asset, manage it, and a majority of those we've kept, some of which we've since sold off, but we still own quite a bit of those on the commercial portfolio. And it's been hugely impactful for us because we're able to get into those deals at a much, much better basis or much better price point than we ever could if we were buying properties on the market, buying properties off the market, or even just buying distressed foreclosed properties, for example, just because inherently if there's less eyeballs looking at a deal, you're going to get a better price on the purchase than you would if you moving up the ladder, buying it a distressed foreclosure that most people know about, buying it off market that maybe an individual or broker shopping, or on market everybody's seeing. So that's been a big avenue for me, and it's really kind of helped jump that off. So been doing that for, I guess, coming on 12 years now, and it's been fantastic. On the residential side, we've bought somewhere in the range of just under about 2,000 houses in small multifamily properties, many of which we've wholesaled or flipped. A lot of them we've rehabbed. We've rehabbed a lot of houses kind of all the way up the ladder in price points. Still do quite a bit of that. Started a property management company to manage our single and multifamily portfolio, our apartment buildings, and our commercial portfolio. So still own and manage that, or own and run that company. We have the residential company, and then the commercial portfolio that we're scaling all the time, and then the note side. Now we're up to just under about 200,000 square feet of commercial space that we own and manage. Still actively looking to add to that, and then all of the residential portfolio and apartments that we own and manage. So, and as we were buying commercial real estate and primarily commercial notes, we realized that a majority of folks out there, even seasoned, skilled investors, don't really understand the commercial note side or know how to get into that. And we had more and more folks kind of coming to us asking how we work on that. So we've worked with some folks to kind of show the benefits of getting to the commercial real estate deals at that level, at a level where so few eyeballs are looking at it, so few folks are getting the opportunities to see those and talking to the banks at the right time. And we've had a lot of success of working with other folks and showing them kind of how we go about doing that. And I think in a synopsis, that's a pretty big snapshot, a pretty good snapshot of kind of my journey and who I am. And hopefully that makes sense.